Hello, everyone, and a warm welcome to this new episode of Finotive Funding interview series. And today we have Jakob from Sweden. Hi, Jakob.
Hello there.
So nice to have you here today with us in the interview, and we can't wait to jump in and talk more in details about your trading experience and everything. And let's just go ahead and start. You ready?
Yeah, it's good to be here.
Amazing, cool. So just to start traditionally and classically, we know that like every trader starts somewhere, and it's often their background that shapes how they approach the market. Can you just introduce yourself to the audience and tell us a bit about like how the experience started and what was the turning points that inspired you to pursue trading like seriously?
Right, okay. Well, my name is Jakob. I'm 45 years old,
Hmm.
from Sweden. Born up in the north near the Arctic Circle. Currently, I live a bit outside of Stockholm. I have a background in software engineering, and I've been doing that for about 15 years. Started in the wrong end of things. I started with freelancing, which is really a terrible
Uh-huh.
place to
Yeah.
start
Yeah.
when
Can
you're
be hard
looking
to
for
start.
long-term stuff.
Yeah.
And so that ended, and I went into employment, and after that, a bunch of years in that, I went into uh, more long-term freelance contracts
Yeah.
of the same kind I did when I was employed,
Yeah.
which is was much better than how I started. Um, and at some point in this road, somewhere around when I started employment, that's where I found trading.
Okay.
Actually, it was a bit before. It was actually trading that got me into employment.
Oh, really?
Yeah, and you can probably understand why. Because I figured, okay, I'm not going into employment. I'm going
Yeah.
to trading,
Yeah.
because this was really nice. It
Yeah.
looks simple enough, right?
Yeah.
That's all my money. And what little I had at the time, and I went into employment, and that's how it all started chronologically, so to speak.
Oh, yeah. Yeah. Nice. And looking back at the early days, right? And it's interesting to see how different the market feels when you're just starting out. And you said, what was your experience like when you just first started trading, looking at the charts and everything, just like the first glimpse you had at trading?
Well, I think it was an ad for CMC markets that somehow
Okay.
got my attention.
Yeah. It's just super interesting to me that like whoever I talk to about how they started trading, they just all start with it was an ad that pops up on my
Yeah,
phone and then
like,
it
what's
starts from
this?
there.
Sounds interesting. Oh,
Yeah.
right, because I remember my very first experience with the markets was the dot-com bubble,
Okay.
and I was about 20 years old or something like that.
Yeah.
And I had a little bit of money, and I started buying IT stocks, and I was really the last fool into the market.
Yeah.
And I just, with this gruesome grind down, and everything was lost. And I think something in me wanted revenge,
Well, we all started with that. Yeah.
or a rematch or
Yeah.
something like
Yeah.
that. And so I saw this ad, and I got a demo account at IC Markets, and I shorted oil, I think,
Yeah.
and probably way too much. And okay, you can make money with this. That's awesome.
Yeah.
So I put in like $4,000, and
Yeah.
I made a few wins, and
It
okay,
started
so
from there.
this actually isn't that hard, right?
Yeah.
A day or two later, it was all gone. And then I figured that maybe you actually need to study this a little bit.
Yeah. Yeah. Yeah.
So I started looking for answers, and I realized I needed better answers than what was available in the platform, because I figured something told me that not all of this stuff in there is really there for my benefit.
Yeah.
And later on, that sort of got into way deeper understanding.
Yeah.
But then I found what I would call like the OG of smart money stuff, which is the trade guider chats in the UK. This
Indeed, it
is
is. Yeah.
the old syndicate trader from California. no longer alive, who used to manipulate the markets way before electronic trading.
Yeah,
Manipulate the news conferences and
definitely. Yeah.
news and the market itself with endless
Ye-
capital.
Yeah.
And so that's where I got my first understanding of how markets function. And there are big fish and small fish, and then
Yeah.
someone's running the ocean, right?
Yeah.
So and so I didn't really have a lot of trouble reading price. Actually figured that out pretty quickly, I have to say.
Yeah.
But I struggled immensely with consistency and risk. So that's sort of how I started, and I figured out pretty quickly that I can't go on putting in my own money
Yeah.
amounts. And then I found Topstep. It was the early days of Topstep.
Yeah.
It was before there were really any explosion in the CFD FX scene. I started in the futures and got beaten up less less brutally from a financial standpoint. It was just more drawn out, so to speak, in terms of learning process, right?
Yeah.
But at that point, I figured that goes with the game. You have to endure certain things
Definitely.
while you learn.
Yeah, definitely.
But that's how it all started, really.
Yeah. It's very nice, actually. I'm sure there will be one person at least that can relate to that is just starting trading, and they can relate definitely to what you just said, which is very, very interesting. I took a look a bit on your accounts and what do you trade and what do you prefer to trade, and I saw that like you mainly go for challenge accounts. And they are, a unique way to prove yourself as a trader, since you go through steps until you achieve the funded status and everything. And it requires actually discipline and precision. Why have you chosen to focus on trading challenge accounts? And how do you think you can adapt your strategy between phase 1 and phase 2 of the challenges?
Right. Well, so I have two prop stacks, so to speak.
Mm-hmm.
One is the intraday, which is not the one at Finotive. Well, it was just today I put it there. But so I have a prop stack of a couple of funded accounts with other firms.
Yeah.
It's part of the good guys, the reliable guys, right? I learned a couple of lessons there with some firms that should never be named again. But so the intraday trading is what I do. That's because I ended my career in IT, and so that's what I make money.
Yeah.
And in Finotive, I decided I was going to do Bitcoin, and I was going to make it a swing stack.
Okay.
And I got funded actually mainly through the Bitcoin trades.
Okay. That's what I
More
noticed
like
as well.
two-day swing kind of a thing, and then I wanted to do even longer, bigger swings. And I just concluded recently that that's not working for me. That's not a time frame that actually works for me. And the Finotive accounts is drawn down now quite a bit from that.
Yeah.
So I placed it in now today, just an hour before I placed it in the intraday thing.
Okay.
Because it just doesn't work for me. And Bitcoin, actually I got funded with the Bitcoin trade, but it was more like, I was trying to do this way too big risk reward. I got a ton of losers and then a couple of big winners. I'm like, okay, that's one way to trade, but it was too mentally taxing. So it became a bit of an experimental stack in that way. Now I decided I'm not doing any kind of swings. I can't operate on time frames. It's possible for me.
Yeah.
So it's really, I'm just doing one thing now, and that's the intraday. And my system has all gone through heavily simplification recently. From just working a little bit too hard for things. I got a bit, let's call it ICT brain damage.
Yeah.
I realized that I've become. I learned a whole lot from the man. And a lot of things. I still use some of his stuff, which is highly precise, highly good.
Okay.
But the problem I had with ICT in the end is that I was seeing setups everywhere all the time. Because the thing with it's more like you read the market now and you're supposed to do whatever it's doing at any given time. And that is really, really difficult to do. And it means a lot of the setups I saw, I thought they were better than they actually were.
It is, yeah.
So I went through heavy simplification recently and just focus on two things. I look at markets instead of just trying to specialize in cable.
Yeah.
And that has really, really improved things.
Mm-hmm.
Cuts my hours down if I want to. It gives me more downtime.
Yeah.
And better results, actually.
Definitely, yeah. That's something that also people who are just starting trading need to know, that you sometimes just have to sacrifice a little bit of time if you want to actually do a lot of stuff simultaneously, as you mentioned.
Well, you have to do a lot of R&D. You have to fail so much.
Exactly. Yeah. You just have to know how to learn from the failures. That's the key thing.
Even when you have something that works,
yeah,
I think you still have to test different waters, and be ready for that not working.
Exactly. Yeah. True. Yeah.
Because you learn so much. Right?
Yeah.
Of course, I wanted to know if I had a swing trader component in me, and I realized that maybe I'm just too young. Maybe in 10 years I'll have the patience.
Yeah. Exactly. Yeah.
But now that's definite. Now I'm not doing that.
Really? So it's just it was definite decision.
I'm going to focus on this simple working model.
Yeah.
That is so much more efficient than I was doing.
Yeah.
Up till like 2 days ago.
Good to know. Great. Yeah. Awesome. So I was saying that success in challenges isn't just about meeting targets or like what you mentioned as well, and it's also about like embodying the right habits, as we were talking now. And what are the key traits that you think traders need to succeed in challenges accounts?
Well, I think I look at this in a bit of these classical stacked pyramids.
Yeah.
Layers, like a base and then top stuff.
Yeah.
And from my point of view, it's like if you don't have risk management that works, nothing else matters.
Okay.
That is my experience. Nothing else matters.
Okay.
Because if you are inconsistent with risk, that means you have no idea how if your edge is performing.
Yeah.
Because you will get this big nice win and you think that you did something good, but you were over leveraging and you actually, like, it doesn't matter if you win or lose. You don't know if what you're doing is actually working in the long run. You only know that if your risk is under control and consistent.
Yeah.
Be it some kind of a fixed lot thing or you risk a specific percent, or you have 2 tiers of risk, whatever. You have to do the same thing.
Yeah.
If you don't have that under control, you can survive longer drawdown periods, which will happen.
Yeah.
Then you don't know how well you're going to handle those either.
Yeah.
Because you're not going to get out of them.
Correct. Yeah.
You have to restart the account, and then you start with a new mindset.
Yeah.
It's a different thing when you kept an account alive.
Yeah.
For a longer period of time than if you just churning accounts.
Correct.
Right.
Yeah.
So that's the absolute most important thing.
Yeah.
And then I think that you need a very detailed plan that you will try to follow. The ability to follow a plan beyond the prop firm rules, right?
Yeah.
You need a protocol for yourself.
Yeah, personal level. Yeah.
And then you need good price action reading skills.
Mm-hmm.
Yeah, I would say that.
Yeah, correct. It's great that you mentioned risk management, and it's that's the first advice that everyone gives to novice traders. And we will move on and speak about risk management. I'll just try to spot the light a bit about your background and your risk management foundations. And your professional background is fascinating, to be honest, coming from an industrial IT into trading, and also the lessons learned in high stakes environments often, translate well into trading, definitely, and where precision and also risk management are key, and they're very important. So can you share with us a bit about how your experience in industrial IT shaped your approach to trading and risk management? And in other words, like, how did working in these high stakes environments influence the way you think about and manage risk in trading?
Well, the answer is easy. It was absolute absolute. And you would think that's not the case, right? But it absolutely is.
Actually, yeah.
It is. So I worked for 15 years in like 12 years in industrial IT.
Yeah.
It was kind of this bigger mission critical stuff. I worked on the Swedish Griffin E-jet fighter. I worked in battery factories, power transmission, all sorts of stuff, right? And the thing is that engineers take a very big pride in being right, and for a good reason, right?
Yeah.
You want to control outcomes, and you want to be right.
Yeah.
That had a terrible detrimental effect on my trading, and you would think that it was actually. I think actually engineers have a bit of a more difficult time with the psychology of the market because of that.
Yeah.
Because and I was also into consulting, which is a lot. You can have this like kind of a push forward mentality.
Yeah.
And so I applied that thinking into the markets, which means that, in life, when something works for you, you do something that works. You tend the natural thing is to do more of that.
Yeah, exactly.
Right?
Yeah.
And when you try that in the market, it doesn't work.
It doesn't work. Yeah.
It absolutely doesn't work.
Yeah.
And trying to control the outcomes absolutely doesn't work. And
it demands adapting all the time.
So I had to unlearn so much, and that took me ages.
Yeah.
And the other thing I would say is that, you'd think I would have an advantage coming into markets because of I was making really good money.
Yeah.
I was invoicing $15,000 a month, including VAT and stuff, right?
Yeah.
So that's really good pay, right?
Yeah.
But that was the only thing that helped me with when I got into trading was just losing more money faster and experience more, more intense negative emotions when I did so.
Yeah.
So that really didn't help at all. But what did help was how I got out of the situation, because I ended up in a pretty bad situation. I lost a ton of money. I lost so much money.
Yeah.
I mean, it's a six-figure dollar amount before I, rock bottom. I'm like, okay, what am I doing? And it was terrible. And then I realized that, I'm not wired like a lot of people I see. I realized I have to stop comparing myself to everyone else and just realize what is my circumstance here?
Correct.
How can I fix my problems and not not try to be like other people.
Yeah.
So this was like a couple of years into it when I just realized what I'm doing is absolutely not right. And I'm not really looking at myself the way I should.
Yeah.
Then I realized, what can I do? Because my main problem was controlling risk. Everything else was working, but I got funded and I blew it. I got funded and I blew it. It was just a never-ending story.
Yeah.
And I realized that main challenges was I'm impulsive. I have some kind. I have probably an undiagnosed form of ADHD.
Yeah.
That's a real edge in IT, I can tell you, because I was so fast with engineering.
Yeah.
And I got really good at reading price. I was so fast at figuring that out, but I couldn't control myself at all in the way that I wanted to. So it didn't matter if I make a plan in the evening. Next day's trading, it goes out the window.
Oh.
So you know that's how, because you know you're the football coach in the evening, and then you're the player on the field in the day.
Yeah, yeah,
And
yeah,
I just, you know, fuck that.
yeah,
I went into the game, right?
yeah,
So my way of solving this was making a hybrid thing of myself and software.
mm-hmm.
So I just had to box myself in with code and you know, control my risk that way by just simply enforcing what I am able and not able to do.
Okay.
And that's where I really figure out that okay, this is a solution for me.
Nice.
You know, I have all these rules, but I just failed at being consistent in following them. So you know, I have to make sure I absolutely cannot break them.
Yeah.
So so that started like the second phase of my trading to encode the rules I had and enforce them.
Yeah. But at least the background in IT helped you somehow to build your own risk management system as well.
It helped me in many ways because when you're that good with software, everything with the IT stuff part of in trading is very, very easy. And anything I need my environment to do, I'm able to do, be it in MQL5 or C# in NinjaTrader. I was doing C# for 15 years. So
yeah, definitely. Yeah.
Some of these platforms use C# and MQL.
Yeah. Yeah.
So that's the main advantage to being able to talk to all these APIs and
definitely, yeah.
You know, tell them what to do and so on.
Yeah.
So I started to build a risk management system, and this started in the future. So I was working towards the Rhythmic API.
That's actually a next step because I mean traders often rely on plans and rules, which is very standard, right?
Yeah.
But building tools to enforce them just takes things to another level, and something we don't hear very often. That's a trader just would build their own system. So what inspired you to just build your real-time risk management system, and what was the development process like?
Because I was at the point where I have no choice but to succeed.
Great.
Like I really felt that. Like I'm in this hole. I have to get out of it. I don't want to be. I wanted to get out of IT. That was my dreams. I'm just leveraging the situation sort of.
Yeah.
And that's where I got a lot of fire from to build it. And to this day, I haven't seen any this exist anywhere else. So basically, it's a server side system that makes it completely unbreakable because not even I can override it. So I have this plan with this rule. You can trade these markets. You can trade in these times.
Yeah.
You can have maximum this lot size. Your stop loss can be maximum this amount of pips. Your profit maximum this. If you try to move the stops, they go right back. You know, if you can take maximum 15 executions in a day. If you try anything funny you try outside the rules, it immediately liquidates me. If I hit a maximum daily loss, I'm done for the day. I mean, I had the biggest problem being done for the day.
Yeah.
Just went back in after an hour, often messed up.
Yeah.
And so what I now have in my intraday, I have run this on my intraday stack. And when I'm done for the day, there's nothing I can do. I'm done for the day.
Sure.
And that makes my mind kind of relax and I go good.
Yeah.
So this has been in development for quite some time. I should not get into that. But it's I started to productify it actually recently. So this is going to come out as a product.
Okay, nice.
Stages. It's going to support every platform out there eventually. I'm not going to plug it now, but the first it will be released for the most popular platform quite soon, because I think it can help a lot of traders, because this is nothing out there for helping traders controlling risk.
Okay.
I mean, really controlling risk. I mean, there are different tools, but what help is it if you turn it off? Because the main problem is, like, if you go on tilt, you lose your mind. And when you lose your mind, everyone has had this experience.
It is, yeah, indeed.
Everyone knows what it's like going on tilt, and that is the thing that can come and bite you, any time in your career, really, which makes it quite dangerous.
True. Yeah, it can be, definitely.
So that's the problem with tilt. You have this plan and you go on tilt, and your brain drug factory starts, producing all these kind of chemicals.
Yeah.
And you retreat. Eventually, at a point, you retreat into the amygdala. I mean, there's two stages, two parts of the consciousness in trading that is extremely dangerous.
Yeah.
It's when you win too much, or when you lose too much.
Yeah, it's either overconfidence or...
The most dangerous one is when you win too much, because that's the euphoria.
Yeah.
You get so much dopamine and so much endorphins and all this kind of stuff.
Correct.
You think you're invincible, and then you're screwed. Then you're really screwed.
Correct. Yes.
And when you're down a lot, you're slightly less screwed, but still screwed, because that's when the revenge trading comes in.
Yeah.
And I just have to comment one more thing on that, and that is one of the biggest mistakes I see, mainly from young traders. I'm not pointing finger. I've been there. I've done all the mistakes you can ever imagine. So what I see them do is they want to make more money than they are emotionally and mentally ready for. They see that it's easy to make this kind of money.
Mm-hmm.
And the problem is that our brain works like a thermostat. So that's what you see in life. You're able to get this kind of a job and make this kind of a money because that's where your consciousness is, right?
Yeah.
So if you have a job and you make, I don't know, let's say $6,000 a month, your mind is not ready to deal with $25,000 a month. Very, very few can make that transition easy.
Yeah.
Because it's like when things go bad for you in life, what we do is we just get started on fixing it and making it better. That's the brain telling us, you got to fix it. We're going to fix it.
Yeah.
But when we do too well, there's another mechanism that kicks in, there's all these subconscious fears that we may not even have a conscious thoughts, but then the cooling system it kicks in, and we self-sabotage down to the level where we are comfortable.
Yeah.
And that's how you blow accounts when you trade too high and too big size of an account that you're ready for.
Yeah.
I think many people should start with small accounts and do this gradually, but that's another challenge because you want to get to the big boys quickly.
Exactly. Yes. You want to cut short.
I think that's a big hurdle that many, in particular young guys who haven't may not have a career behind them.
Yeah.
I never had a problem with the bigger accounts per se. I just had a problem with risk. But even from that point, I felt that because I was also trying to make too much money too quickly, and I felt that thing as well. And what helped me was, again, I'm enforcing this. Some people have no problem following their plan. They're just shit at reading markets. I was just the other way around.
Yeah.
And trade small on a level where you are in the emotional and psychological sweet spot.
Yeah, correct.
Where you can think clearly and react and reflect.
True, yeah. I mean, to counter this this fact that you should just trade and where you are emotionally ready and mentally ready as well and everything, there are rules and, as you said, plans that you should stick to. So let's say this on a personal level, but on the trading level, for example, having a clear set of rules helps prevent mistakes. But can you walk us through probably and tell us some of the most critical rules that the prop firm is presenting to the traders that you think definitely help traders avoid like common pitfalls?
What helped when I discovered the Finotive has a risk team that I really like. I think they are on the right path with things because I didn't trade. I traded big in Bitcoin in the challenge. I mean, I traded the same size with 3.5 contracts of whatever it was, because I was setting that in my copier, because I executed the SIM account and then I copied to my. And that meant it was way too big in Bitcoin, but then it was not very much in Forex. So when I decided not to trade Bitcoin, actually they said, okay, you can maximum now do what was it, 3.5 in GBP.
Yeah.
And I thought that is absolutely brilliant. I think first, a lot of people whine about this, like, why did you limit my risk? I love it. Keep limiting people. That's how they're going to succeed. Most prop firms have no idea how many great traders they have. They're just not able to follow their risk.
Yeah.
So the Finotive risk team actually said you can maximum do this, and you can only trade these markets. It was great. You lifted the restrictions of a single Forex market and changed it to asset class, so you can trade any Forex.
Yeah.
No, that's much better.
Yeah.
But that is great, because you can get these impulses to trade a market you're not supposed to, or you don't know. You just see the market and say, oh, that looks great, right?
Yeah.
And you take the trade and it's done. So I believe in adding more granular rules. It's just a challenging time for prop firms to navigate from what everyone's currently doing to something that every prop firm wants to, get to another level. It's just they have the reality of the industry to deal with. I can just imagine everything. I'm not really aware of everything, but I can just imagine that it's a balance to strike, and a lot of people don't really understand or appreciate the opportunity we have.
Yeah.
So I think the base set of rules, I don't like them. I think they should be far more restrictive. I think the leverage should come way, 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 way down. But I think that to impose restrictions when you get into a funded phase, that is really good. I welcome more of that.
Great. Awesome.
Because then you know that if you do this, they're gonna breach your account.
Yeah.
And that actually helps a lot.
Exactly. Yeah. To be honest, when there are some rules that you should follow, and you can just see that bold red line that you should not cross, it just makes you disciplined.
For most people, I think that helps tremendously.
Yeah. Exactly.
And then there's a subset of traders who have trouble with that anyway.
Yeah. True.
But most people actually don't have that much of a problem not crossing a red line.
Yeah. So speaking of risk management in practice, working with boundaries like drawdown limits and daily loss rules can feel, restrictive, but it is very crucial and important in long-term success, right? If you can tell me probably what strategies do you use to stay within some trading boundaries, like for example drawdown limits, etc., and how have they contributed somehow to your success in passing challenges?
Okay. Well, like I said, I just now an hour ago put the Finotive on the intraday stack, so it's now operating under these rules.
Yeah.
I had in the funded in Finotive, you can risk a quarter of your drawdown in a single day, measured on the stop loss value.
Mm-hmm.
So when I was doing the swing kind of a thing, I was going up to, quite a lot.
Yeah.
2%, 2.2. I was quite close to that limit.
Yeah.
And that's not very good. But this was also a bit of an experiment, and I knew kind of what I was doing. I thought but now what it's currently on now, and what I'm doing in the intraday stack, the funded intraday, it's let's see, what is it? It's about 1.5 to 2%, not of the account. Let's speak in account terms so everyone understands.
Yeah.
So that would be about 0.25,
Yep.
0.3 per trade.
Correct.
My stop loss value is fixed, so I'm not able anymore. I don't have the. I need this help with that. So it's every trade is now the same.
Yeah.
It's going to get stopped out at 0.3, 0.25.
Yeah.
I only trade forex. I trade a subset of 17 pairs.
Okay.
I have trading hours that I'm allowed to place trades between 7 in the morning and 9 o'clock at night, roughly.
Okay. Mm-hmm.
Those are very important because sleep is very important.
Yeah.
Because if I start trading Asia, then I'm up till 3, 4 in the morning, and
Yeah.
that's so that's very important rule.
Yeah.
I don't actually limit myself with news, although I have the ability to do it.
Yeah.
But as long as if I'm in a trade and I have decent amount of headroom,
Yeah.
prices before the news,
Yeah.
I'll protect the trade and I let the news do its thing if I think I know what it's going to do.
Okay.
Unless it's PPI.
Yeah.
Or the other big dangerous guy, the NFP.
Yeah.
Those I stay out of,
Okay.
unless now it's intraday, so I'm actually
Yeah.
really staying out of it.
Yeah.
What else do? I have a max execution per day
Mm-hmm.
to help me with over trading.
Yeah.
I know I only have this amount of bullets.
Okay.
I try to use them wisely.
Okay.
I have a maximum daily loss, which is about 1.4% now, 1.5, something like that. I'm experimenting right now to see what the sweet spot is.
Yeah.
And then also a maximum profit amount, because my mind will otherwise try to tell me you can just keep going and make even more.
Yeah, exactly. Yeah.
So there's it is. It's a psychology of losses.
Yeah, exactly.
It's because everyone has lost money in trading one way or another.
Exactly. Yeah, definitely.
You blew all these accounts. I mean, there's some people that are just freaks. That I read about this guy on X today. He had kept an FTMO account for 1.5 years.
Yeah.
And he was just starting.
Wow.
But he had complete inability to make any money.
Yeah.
He was just been break even. He's a beginner, been break even for 1.5 years. And that is outstanding in pop world.
Yeah, it is. Yeah, it is.
It's absolutely amazing.
It is, definitely. Yeah. I mean, what I'm hearing is, only to be honest, great approach of what you're saying, like all the rules and everything. But I noticed that you trade Bitcoin a lot lately. How do you keep yourself adaptable with all these rules, with such volatile market? I mean, we know that Bitcoin is one of the most exciting but unpredictable markets, right? Yeah. And it demands extra care with risk, especially. So what specific risk management techniques do you use, like when trading Bitcoin, to handle its volatility?
Well, I'm not very proud of how I passed the challenge with Bitcoin. I have to, because that's why I decided to stop trading it.
Yeah.
Because I'm not really compatible with it. Well, I mean, I am in a way, but
you mentioned it before actually, but I wanted to know more details.
Really tight stop losses, because it can go crazy in so many directions. But then I would end up taking like 6, 7 losses. Yeah. And then I made like 15K. These are 2 20K accounts at Finotive, right?
Yeah.
So I would just take these small losses of like 400, 400, make 20K.
Yeah.
So I mean, I guess that's a model, right?
Yeah, it is.
But I don't like that personally. To mix that with Forex, at least, I'm going to have a crypto account.
Yeah.
Later, but not mix it together. So my explanation of how do I handle the volatility and risk in Bitcoin, I would say badly.
Yeah.
Even though I went funded with it.
Yeah.
A bit. Part of that was Forex.
Yeah.
But I have to be honest and say that
You're not really proud of it.
It was not pretty.
Yeah.
Maybe it was not pretty.
Yeah. It
I
serves
didn't
the
draw.
points, but
I didn't draw down a lot at all.
yeah.
I was, but it was this ugly curve of this going down, 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 vertical.
Then it went up. Yeah.
And down, 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 vertical up.
Yeah.
So, that's not really how I want to do it, because
Yeah.
it's far more better to try to. I mean, it's just depressing. You have 10 losses in a row. The big winner.
Yeah.
It
Yeah.
sucks.
Yeah.
Like most of the day sucks. So no, I can just say, don't do like me in that aspect.
Yeah. I'll go a little bit back, and we'll talk about the leveraging that you were talking about. I'll take just a moment and try to address common risk management issues. For example, over leveraging is a mistake I think many traders make when chasing profits. My question would be, how do you approach the challenge of staying within leverage limits, and also what strategies help you prevent excessive exposure?
Well, I mean, I can tell you what I do, and then have to give some general advice. But for me, how I do that is I do that with my risk management system. It's just I can't go beyond the limits.
Okay.
Because if I do that, my trades are liquidated.
Yeah.
And so this is how I believe. This is a bit more, because you see the problem traders will face. And I really hope I will be able to help a lot of people with this down the road.
Yeah.
But the best advice I can give right now to people is you have to realize the situation they're in. Mm-hmm. as a remote prop trader.
Yeah.
First of all, I think most prop traders don't have that much professional experience.
Okay.
And even fewer have a professional experience from a trading floor, right? Mm-hmm. I can imagine that if you're a trader in a physical prop firm or a bank or whatever,
yeah,
damn well that if you screw up, you're fired.
Exactly, yeah.
Or there's some kind of disciplinary action. That, and then everybody who has ever had a job the instinct of don't screw up to get fired.
Yeah.
You're gonna do everything you possibly can instinctively not to get fired.
Correct.
However, when we're remote prop traders, we sit, at home or in our own little office or library or whatever, and we are, number one, we're all alone with our demons. There's no leverage on us to actually follow the rules because no one is going to see if we fuck
Exactly.
up.
Yeah.
So if no one sees it, it's up to you to tell someone. You're going to let yourself get away without any real disciplinary action, because you can actually choose your disciplinary action. It's like, I'm going to go to the gym one more time now because I blew the count. No, that's not helpful.
Yeah.
So that is the real challenge of that. You have too much freedom.
Yeah.
You want the freedom of trading, but you have to realize the power of restrictions.
Yeah, definitely.
So what you can do, I guess what people can do is, one thing that can be powerful is some kind of commitment buddy, perhaps.
Mm-hmm.
Take tons of notes to get things out of your mind. Do other things in life that requires and builds discipline, because whatever you do in life is going to bleed over into your trading.
Yeah.
If you never make your bed in the morning, if you have a life,
the little things.
If you have a life where, if your life is not based around trying to be disciplined, then in trading you're not going to try.
Exactly. Yeah. True. Correct.
It's going to be.
It needs to have consistency as well. You have to be consistent in those things, not only doing once or twice.
You have to find. I would encourage everyone to embrace limitations, because in trading, embracing limitation is going to help you a lot.
Definitely.
You have to love these restrictions.
Agree.
For this guy, that it was another prop firm that had limited him down to take maximum 1% risk per trade, and he was whining about it.
Yeah.
And it's like, dude, that is 10% of your maximum drawdown. Do you feel limited?
Yeah.
You're allowed to lose your entire account in 10 trades. But he thought that, well, they think they're supposed to be able, because a lot of traders, I've seen this countless of times on X. And frankly, it's embarrassing. That is, and I know that it's you know, it's a big misunderstanding. You know, you come into trading and you may read in all these different places that you're supposed to risk 2% per trade.
Yeah.
Risk 2% per trade is in all the books.
Yeah.
Don't risk more than 2% per trade. And they come into the prop environment and, okay, I'm going to risk 2% per trade.
Yeah.
Of the balance amount, but they don't calculate it of the max drawdown.
Yeah.
And they don't understand they're risking 20%.
Exactly.
Which is like completely degenerate risk.
Yeah.
It's insane. You know, by any metric, it's insane.
Correct. Yes, it is. I agree.
But I believe that's how it happens. They pick up somewhere. I'm going to risk maximum 2% per trade, so that's not very much. I'm going to do that in the proper account. You know,
yeah,
that's how pros do it. And I wish that I guess I wish the prop firms would be better at educating on certain topics of risk management. Like this
yeah,
would be, you know, it would help a lot of newbies.
Definitely.
So that's a big thing, because the longer you can keep an account alive, the more confidence you have.
I think so. Yeah, as well. Yeah.
It's a confidence hit when you blow it up.
Yeah.
Unless you're one of these idiots who have it as a strategy. You know, the guys you're trying to stop all the time.
Yeah. Well, to be honest, I mean, speaking, as I was saying, the consistency part, to be honest, staying consistent, speaking of myself as well, staying consistent over time can be one of the toughest challenges for any trader, either novice, amateur, professional, whatever it is. And drawdowns are a reality of trading, but like managing them is what separates professionals from amateurs. And that's something that I think everybody agrees on. So I think moving ahead and speaking a little bit about advanced risk management concepts, right? And I'll ask you basically, how do you adjust your approach to risk when transitioning to larger accounts? Because you mentioned that in the beginning, but you didn't really dive into details. So,
okay. Well, I actually, this is another thing I should never have done, but I most of the time I was trading pretty large accounts.
Okay.
I never went below 50K for the serious attempts, 50K, 100K.
Okay. When you just started trading, when have you actually went for like a bigger capital to trade with? Like how long did it take you to?
Oh, I guess, I mean, I would say it was about a year ago. When I would say, because I left my career in June.
Okay.
That's when I quit.
Mm-hmm.
And I started to feel ready about January this year.
Mm-hmm.
Before that, I had maybe 2 years of trading 100Ks and blowing 100Ks and 200Ks and blowing 200Ks. Like I said, I had money I had cash flow.
Yeah.
Good cash flow. So no, this is stupid. This is absolutely stupid. Yeah. I should have gone with the smaller accounts, of course.
Yeah, as you mentioned before.
But that's how it went. And I eventually, I eventually got to where I wanted to go. But in hindsight, that was so dumb.
Yeah.
You can make it in prop trading with almost no money if you do it the right way. It just you can build a career from a 5K account.
You hear, traders?
That's the magic of this.
Yeah.
But I wish I would have done it differently. But I also had enough success to not choose to go slower.
Yeah.
But it would have been the wiser thing to do. So when we talk about transitioning to larger accounts, I can't really talk about that. But let's say, how do you transition from challenge to funded to live? What I now do, because I'm working on expanding my stack.
Yeah.
I do the same thing now. And that became a lot more easier when I was keeping funded accounts, to do the same thing in them, because I don't care as much of how long it takes.
Yeah.
Before I had this, I would say it's slightly more risk in phase 1, slightly less in phase 2, but phase 2 generally, as I do in funded.
Yeah.
I think that's reasonable. But I think the ideal thing, especially once you get funded and you want to expand with more accounts, just plug them in and just forget about them until they're funded.
Yeah.
That's the ideal way.
Correct.
Because then you're consistent. You're doing the same thing in everything.
Yeah.
Peace of mind. It's extremely hard to choose to do, but I think that's a perfect approach. But it's perfectly reasonable to risk more in phase 1 and less. Don't go crazy.
Yeah. Yeah. I mean, that's also points out the fact of behavioral risk. It creates a behavior that you should have and you should also follow. And as you said, like revenge trading and overconfidence can cause significant damage if uncontrolled. And you mentioned a couple of steps you've taken when you were overconfident and also you were trying to revenge trading before. And I hope traders will learn something from that. And how do risk rules help you to stay grounded, beside the fact that you try emotionally and psychologically just come back from those drawdowns? But also, how do risk rules help you just to stay grounded?
Well, this may sound weird, but one of the things that was most helpful of all was actually taking a lot of losses.
Okay.
Because I'm at a point where I'm neutral to a loss.
Okay.
I was not neutral to that loss before, but I'm able to be neutral now because I know that my risk is under control. If the risk is under control, then you don't take as much big of a emotional hit because of each loss or each gain. You're kind of adding to that bar. It goes up and up and up, and then you reach the point of insanity, and that's done. So the slower this one rises, the better emotional control you will have throughout the day.
Yeah.
Other things that I think is very beneficial is moving your body when you're trading, like putting in a workout session. If you're doing this, a lot. If this is all you do, it's extra important.
Yeah.
Move, take walks, meditation, do some yoga, move about.
Yeah.
Because we get into our heads immediately when we trade.
Exactly.
Yes. And if we use our body, we kind of get back into the body.
Yeah, definitely.
I think that's a big one. So following risk rules, whatever way you do it, I think that's the key to having emotional and psychological discipline in the trading.
Definitely, yeah.
Because it limits the emotional range you're going to experience in your trading session.
Yeah.
Right.
It is.
It's like your personal VIX index, right?
Yeah.
Yeah. So that I think rules are intimately connected.
Nice. Great to know. Great to hear. I'll ask a bit about the risk management philosophy. I'll call it that way.
Okay.
I think my question would be, how do you balance consistency in trading with the need to adapt to changing market conditions? Because we know that markets are like consistently shifting, and traders sometimes need to find the balance between consistency and adaptability. So if you can walk us through a little bit about it.
The way I see it, like I said, I've been ICT brain damage on good side, on good parts and not so good parts. And one of the good parts is that I don't see conditions changing. I see markets doing the same thing all the time.
Okay.
There are periods where markets become more volatile, but I essentially think they do the same thing day in and day out, and that they might have a bit of a different personality between them, but I think they're doing the same thing day in and day out. It's like this, there's a fractal nature to the market as well. That
Okay.
each time frame is essentially more or less the same. With
Interesting.
its, so I know that if you, let's say you have a strategy based on oscillators and stuff like that,
Yeah. Yeah.
then you're exposed to this problem. But if you have a strategy that is more price action oriented,
Yeah.
then you're going to be far, far less exposed to that thing of your edge stopping to work because of market conditions.
Okay. Yeah.
I think I think that's so. I don't really think about that very much, actually.
Okay. Part of we talked about philosophy. Now we'll switch it a bit and talk about the psychology. We'll go
Okay.
back and make it a bit more detailed. So the psychological aspect of trading is, I always say, it is often, like what makes and also breaks a trader over the long term. How important do you think the psychological aspect of trading to you, and how have you developed this side of your skill set since the very beginning when you just started trading? Because I know over time, that it's an important aspect, and you actually ended up building another side of psychological trading, like
Yeah.
just from you, but just in the very beginning when you just started trading.
You know, I said that, mentioned that pyramid thing,
Yeah,
and you
yeah,
have
yeah,
risk management at the bottom.
yeah.
In a way, psychology is
Below it.
even bigger platter
Yeah.
beneath.
Yeah.
In a way, in a way, especially if you rely on your psychology to make sure you follow your risk rules, then if your psychology isn't working, your risk management is not going to work. And if your risk management's not going to work, your strategy is not going to work, and you're not going to get the outcome you want.
Okay. Yeah.
So I had my challenge was never reading price. Got very good at that very fast. My challenge was like with the psychology part,
Yeah.
and I had to work through a lot, and so it's abundant to care to me if your psychology isn't working,
Yeah.
if your emotional control in trading isn't working, if you have previous experiences, whatever they may be, that bleeds into trading. For me, it was the immense backlog of engineering,
Yeah.
the bad aspects of coming from that career. There were other personal things that I discovered
Yeah.
that, there was so much that I hadn't dealt with, that trading exposed to me and told me that you have to actually fix these things now.
Yeah. Yeah.
You know,
That was
because
actually my next question, because the thing is, I always ask traders, whoever we have here in interview series, I ask them like, trading just has its own ways of revealing who you are truly, and
it's
then like,
crazy.
yeah, it's very interesting.
Because I think it's because it applies so much leverage on you.
Yeah.
Because if you cannot go, you may have gone years, decades, knowing that shit is under your carpet, but you never touch it.
Yes.
But then trading comes along, and then just holds up the stack of dollar bills in front of you.
Yeah.
Maybe now it's the time, right?
Yeah.
That's how it works, right?
Yeah.
Or it's the market mistress. She weaves her whip, gives you a big,
Yeah.
great passion, and you realize like this hurts too much. It's one of those two ways,
Yeah.
and it's incredibly powerful.
And it humbles you very fast.
Yeah, it is. It's you because you cannot escape the flaws of your personality in the trading environment.
Exactly.
I don't know if there's really any other environment where you cannot work yourself around and work around it.
Yeah.
I've been able to work around a whole lot of my issues by building software,
Yeah.
but it doesn't matter. I still know unresolved issues are there.
Yeah. Yeah.
You know, and it's very special business in that sense.
Yeah.
So it is super important. If your psychology isn't working, your risk isn't going to work. If your risk isn't going to work, your strategy is not going to work.
Yeah.
Just end of story.
Psychology is the best foundation to build upon for your trade and career, basically.
It is. It's very important. Just read everything you can come across.
Yeah.
There's some really good mentors and book authors out there.
Awesome. Yeah. Well, last thing I would ask you to tell us about is if you can give us just a general advice to novice traders for both, like personally and professionally as well, regarding trading and risk management. In other words, if you would go back in the years and meet yourself just starting trading, what would you tell yourself? I see the smile behind that.
I was just thinking if I would pat myself on the back or like a good whipping. Probably both. But I think the one thing I would say is go slow.
Okay.
Going fast is not faster than going slow because of all the setbacks. And going fast means you burn through whatever risk capital you have for starting up this business of yours.
Yeah.
If you go slow and overcome that, then you will have better psychology. Like I said, you can quit your job with a 5K if you just have a little bit more patience.
Yeah.
I would tell myself, because here's the thing, I was buying prop accounts before I knew I could trade them. And how dumb is that? In a way, I had this attitude. If I just get to funding. Yeah. That was my attitude a bunch of years ago. It doesn't work,
Yeah.
And a 5K, the big value is that you have a little bit of skin in the game, and it's very cheap. It's far better than a sim account because you can achieve something. You can achieve something.
Correct.
You can make progress with a 5K.
Yeah.
You can, if you do good in it, you can get some money. You can buy 2 10Ks. If you do good in those, you can buy 250.
Correct.
And then when you have the 250, you buy the 200.
Yeah.
And just imagine how proud you would be of yourself if you were able to do that path. Yeah. Stop doing this stupid fucking flipping $100 to $1 million. Stop wasting time on that. Instead, get your 5Ks or a 10K and buy bigger accounts from there and do it in a way, trade them. I mean, you can take a bit, depending on your income level, of course, but it has to be reasonable risk relative to your income. If you have more money, you can learn faster by burning through these smaller accounts. Don't have a lot of money. Treat them as if they are your dream account, because then when you get to the next stage, you're not going to fall back to the first stage.
Correct. Yes.
Easy.
Definitely.
Right?
Yeah.
You have to be smart and take it slow, especially if you're young, like you're 25, or even if you're 30, 35. Actually, it doesn't matter how old you are. When I think about it,
yeah,
like you're 55 and you discover trading. Like if you do it this way, in 2 years you can be where you want to be. Isn't that amazing?
It is, definitely.
Because how easy is it not to lose your mind and perspective of the world that everybody comes from, right?
Yeah, correct. Yeah.
You spend 3 months in prop trading and you completely fuck up your perspectives about what is normal.
Yeah, correct.
So you gotta just reset and realize, especially if you just you have to reset yourself and realize that you have this incredible opportunity.
Yeah.
And what if it takes you 2 years? Like, how long would you, if you wanted to be a Formula One driver, how long time would you give yourself? If you wanted to be a doctor, whatever, it's going to take years.
Yeah.
And you may be able to do that quicker, or it's going to take you longer. But you cannot act like you're going to get there in 3 months just because the opportunity technically allows you to do it.
Correct. Indeed.
You know what I'm saying?
Yeah,
right?
yeah, I understand 100%.
You know, every prop firm offer, every serious prop firm, let's go talk about the bad guys, but the good prop firms, they offer anybody to get to, let's say, a professional level in about a month. It's possible.
Yeah, it is.
But it for sure is not possible if you're new.
Yeah.
So you have to make that distinction, like what is actually possible. It's not possible for you, and that's okay. Because prop firms actually have people from professional trading industry coming into prop, and they just breeze through it, and they just keep on going with their career.
Yeah.
That's part of it.
Yeah.
But that's probably not you.
Yeah.
Right?
Yeah, and you should be okay with it.
No, that's probably not you.
Yeah.
You're gonna need more time.
Yeah.
You know, and it's okay.
Yeah.
Go slow, and you know, that's what I would say.
Yeah, slow and steady until the win is there. Awesome.
And also, whatever, everybody has so different personalities, and everyone's going, if they dig deep into themselves, they're going to find things they can leverage. I was able to leverage my skills in software, especially.
Yeah.
Other people are able to leverage their, you know, very high level of emotional intelligence.
Mm-hmm.
And they have more struggle with other parts. But leverage whatever you're good at. You know, find what that applies to in trading, and then know that, okay, I have that part done. Now let's fix my other problems.
Well, thank you, Jakob, for sharing your insights with us today. And I mean, your approach in risk management, to be honest, combined with your experience and unique perspective, I would call it that way, has provided to me, and I hope also other traders, valuable lessons for, you know, all levels. So to you and to everyone watching, we wish you great and continued success in your journey, and either on a personal level or also trading level. So yeah, and until next time, happy trading.